This is our Forex blog for February 15th, 2012, and like most days we want to buy the super strong ones versus the weakest and sell the weakest versus the strong. The real-time strength shows up in histogram form. This is the dollar and the yen, which we trade most of the bottom ones against, and underneath that we have the daily, weekly, monthly trend. All of these indicators are made up of multiple of our statistical trend tools. Some of them measure the direction, for example, what percentage of dollar pairs are going up or down, and other ones measure the intensity of the direction. So anytime you have a very high percentage of currencies going down and doing so with incredible intensity, then you will see it be red and at or above the 80 line. And anytime it hits the 100% level or very close to it for a bar or two, those trends almost always continue. You know, it doesn't happen all the time. You can see the euro dollar hit it maybe barely once here for 5 minutes. You had quite a few bars of weakness here in the dollar and also the yen. When all the time frames line up, your odds go up. If the real-time trend's down, but the daily trend, weekly, monthly is up, then that downtrend's likely to last less minutes. You know, you might have 30 minutes to 2 hours of downtrend, and then the trend will try to continue up, whether it does or not. Some days it does, and other days it doesn't. Here you have the Australian, strong on all time frames, and in New Zealand. And anytime you see extreme strength followed by very little weakness, that strength's very likely to continue up. And you can see right here it didn't do so with very much intensity. It tried and had a little bit of weakness and about an hour of strength, 15 minutes of weakness, 2 hours of strength. But nonetheless, your odds go up if the daily, weekly, monthly trend's up. So today we want to buy the Australian dollar, the Australian yen, New Zealand dollar, New Zealand yen. We want to sell the dollar CAD, and we want to buy the CAD yen. The euro is also extremely weak, so you could have sold the euro Australian, euro New Zealand, euro CAD, and so forth. So let's take a look at some of those trades. Australian dollar, and we're just going to, other of our classes and videos show, you know, the entry methods. You can see late last night it went up, you always want to draw your fibs, especially when it gets near the upper containment band. Usually this is the area where it kind of runs out of steam and reverses. You draw your fibs on there. Notice where the market went to. Right to that fib target, it kind of ran out of steam. So as soon as the statistical strength runs out up here, hits a fib target when it's above our 2.0 white band, that's usually a pretty high probability place to go short. But before that, you were trading on the upside, and you can see even before midnight, it started showing that this was strong. It went up about 80 pips. New Zealand dollar, same thing. Now, these are Fibonacci profit target levels I spend about 30-40 minutes every night doing for my own trading so that you don't have to. But also notice, as a quick little note, it hit the 1.618 Fibonacci target to the pip, and that was the end of the move. So anyway, you want to trade with a statistical trend until it's way above this upper band, and then usually at the fib targets, or if there's major resistance areas up here, previous week's high, monthly pivot level, it's above our upper containment band. And a lot of times you look for double tops up here, or in this case, you have a 1, 2, 3 pattern. It goes up, pulls back, tries, you know, to go higher and fails. That's a 1, 2, 3 pattern here. So look at the Australian yen. You can see this one also. Late last night went up, and this is an example of our multi-hour rectangle pattern. You go along there, and you have your fib targets of this last wave. Notice it just went a few pips above the 1.382. So if you're going to take this breakout right here, your profit target's only 15 pips up, but you're risking maybe about 10 pips, so it's still worth the trade. But when the market's above the upper containment band, it's a riskier trade, and it's not as likely to give you 30, 40, 50 pip wins as buying near the middle of the range. I like to see strong trends pull back to the hourly, because then you have very high amount of potential pips. If you had bought this right here and held all the way to the high, it went up 110 pips, for example. That being said, you only need 10 pips per day using low leverage to double your account every 2 months. You know, and then at some point you get to, you know, trading psychological huge number of lots that, you know, make you nervous and you can't do. But in the beginning with small accounts, that's true. You can see the New Zealand yen also up, another multi-hour range. Here's a 4-hour trend reversal signal, which usually causes major reversals in price within 3 to 5 hours. And so if you saw one of those, you draw your fibs on here. This is one of those trades where I would, you know, take the trade, but because of this signal right here, really look for any sign of a reversal. When it goes above the fib target and comes right back down, usually I go short right here at 66.04. And this is a very strong trend. The daily, weekly, monthly is one of the strongest trends. I don't usually, hang on those too much on the first wave. I want to see a double top, and then I usually, will hold on longer the second wave. But I would have probably been out of this at 93, short at 04. And then when it came back up, and you can see the statistical strength ran out, usually I'll go short again right there and wait for at least a two-wave down move. So you draw your fibs on the first one, and as it comes down to usually I get out at the 1.618 fib target here at 44. I would have been short somewhere at 91 for almost a 50 pip move on the second trade there. That's getting into some of our systems. The Forex blog, I just like to show our software in action each day. Let's take a look at the weak euro here and the strong Australian and New Zealand. Just watch, you can see this one went down all day here. And again, extreme weakness on the down moves, less strength on the up moves. The daily, weekly, monthly trend of this is very strongly down. Here's the euro New Zealand, again down. And so when it goes sideways here for many hours and breaks down, you go short. You always have your fib target in mind as your exit. Notice it hit the first fib target, then the second, bounced off both of them. It's frequently what happens. Then on the next wave down, you draw your fibs. Guess where it stopped? Almost to the pip at the 1.618. So patterns tend to repeat themselves, and that's why we teach the same concepts day in and day out. The stuff that I find works for me, I teach. So over time we improve our tools, systems, and methods, and I stop teaching the stuff that I no longer use myself. I try to break down our systems into the easiest methods possible. Because when you're watching 12 currencies, and some traders watch even more, it's hard to trade advanced topics. You want indicators as simple as possible that make it very clear. Weak euro, strong CAD, down, down, down. Now later in the day, the pound showed some strength, followed by very little weakness here. That trend's very likely to continue. You don't know how long it will continue. It could continue in reverse for another 8 or 12 hours, but because the daily, weekly, monthly trend's down, this is the kind of trade that I would take. I wouldn't trade super large lot sizes on, maybe my normal lot size for 30% less, just because I'm going against a longer term trend. But a lot of times when you see extreme strength like this followed by this pattern, you're going to get about 30 minutes to an hour trend most times, even though the longer term trend's down. And so coming up to about 7:30 right here, what was the weakest currency? Well, the dollar had some strength. The yen was less strong. And also the euro really was the most consistently weak over the last hour. So selling the euro pound at 7:30 is probably the highest odds trade that you should find. And you can see as it's sitting sideways right here, there's no pullback at all. This is just, the market went down, there's some support right here, and when it breaks down, you go short. And again, most of the time, the market will go to the first or second, fib target. In this case, it went to the first one and blew through the second one and hit the 2.0. Myself personally, when it goes sideways like this for a while, I usually get out, or at least half. I will tend to get out of half my trade, put the stop right above these bars high, and again, if it is going to go down again, I'm going to draw my fibs off that last wave. And almost always I get out at somewhere between the first and second fib target of the second half. Usually my trailing stop's going to get hit. It probably would have got hit somewhere around here, around 45, so I might have, better off getting out 5 to 10 pips, more pips.